So guys, today's topic is going to be on stop loss setting, because this is one of the issues that a lot of us usually have when we taking trades or dealing with our system. So I'm going to be very straightforward with this particular video, because I want us to get what we need to get as quick as possible. There's no time dilly-dallying. So let's pick an area. Let's just say here. So as a day trader that trades support and resistance, and you map out this area as an area where, okay, this is a resistance level. You have a resistance level right here, and your strategy says when price gets to resistance level, you're supposed to sell short. So, and you know you're supposed to sell short. So let's say you're selling short here and this particular area, depending on what time do you trade. So let's say you're selling here and you put your stop parameters here. You should always ensure that it's above the last place price reacted of, that to create the structure for you to get in your entry. So it always should be above, because price has repeated patterns and repeated situations where it just comes and weak at those areas, maybe because to get some liquidity, or maybe one or two. Everybody has different views, but I feel it's liquidity. So price will just come and just weak you out if you don't give your stop loss a good enough space. So situations like this, you just put your stop loss here, right in this entry. If you are going to take a trade here, your stop loss has to be here. So now look at the stop loss is going to be very big. That's why you need to also learn to have sniper entries, like quick entries. You need to be very smart to the market. I will make a video on sniper entries and one maybe in my next videos. But remember, the stop loss has to always be above the last high before you took your trade. So let's use this example now. Let's say you took a trade here, and this is the area that made your decision to take a trade. These are resistance area. When you take a sell, if you take a sell either at this area or at this area, let me clone this, or at this area, your stop loss has to be above here. If you put your stop loss anywhere below this week, you are just inviting trouble. That's what I'll say. You're just inviting trouble to an extent, or you are basically not respecting the market. That's why I feel, because why would you put something, you're trying to sell short in a market that is very liquid, and you want to just be missing your stop loss? It doesn't work like that. So you sell short. Let's say you sell short in this area, your stop loss has to be exactly like this, 45 pips, and you're looking for a 1 to 3, a 1 to 2, a 1 to 1, just depending on what your goals in the market is. So let me show you one more example. So let's say at this area you were able to notice a reversal pattern and you decide to take a trade in this area. Price had 1 bounce, 2 bounce, 3 bounce, and now you are interested in buying. London in the morning, you took a buy. Your stop loss has to be below this last high. So this is a 90 pip stop loss. That's why you need to learn how to get in your trades, sniper entries. You need to get quicker entries, more precise entries. Like any little slacking is going to affect your parameters. So your stop loss has to be below the last candle high, or below this low, so that it protects you from fluctuations in the market. And then you go for your 1 to 2, your 1 to 3, and it's so yeah, that's it on stop loss. Ensure to always set a stop loss, because the market is a place where you can't predict anything. So there's better money in the bank than money thrown away. So if you don't have a trade, or you do take a trade, also always ensure you set a stop loss. It's a good habit to implement going into 2025. So yeah, that's it, guys. For more content like this, like, share, subscribe, and reach out to us if you need particularized or more deep conversations on any of the topic in the forex market. I'll see you guys in the next video. Bye for now.